Welcome students. So in this lecture we will try to do one more problem with regard to the preparation of financial statements of the company form of organizations. So this is again another company, Sanjay Industries Limited, and here almost the information here is also like the information for the joint stock companies, company form of organizations. So again we did in the previous lectures we did one problem that is of Mamta Fashion, and we will do one more problem that is of Sanjay Industries, and this is the last problem we are going to solve or discuss here with regard to the preparation of the financial statements of the company form of organizations. And here we will end up with the preparation of learning how to prepare the financial statements, and after this I'll start the financial analysis part, and then we will talk about the reporting. So it is a composite course about the financial statement analysis and reporting, where we will learn about preparation of the financial statements, analysis of the financial statements, and reporting of the financial statements. So again, if you look at the information given here, that is the trial balance of Sanjay Industries Limited. These are the debit balances, these are the credit balances, and here is the total, which is 44,91,000 in both the cases, and we are given the opening stock, that is stock on the 1st April 2015. Then we are given the sales figure, wages, share capital we are also given, including the authorized capital. Then other items are also given to us, and apart from these trial balance items we are given the additional information also, not much, but yes, it is there. It will serve our purpose to learn that how to prepare the profit and loss account and profit and loss appropriation account, and then the balance sheet as well. So this all information we have to adjust, and then to prepare the trading and profit and loss account, profit and loss appropriation account, and balance sheet of the companies. So this is Sanjay Industries problem. So let us learn how to prepare the financial statements for the another company, that is Sanjay Industries Limited, and then we will be completing the discussion on the preparation of financial statements. After that we will start talking about the analysis part. So here it is, the learning about the preparation of financial statements. So we are doing it in a way that we will have to expand the format. So we will prepare it in the half of the board, then we will expand it in the remaining space. So it is here we are starting from, and again it is a trading and profit and loss account, and then we will be preparing the balance sheet for this. So this is the trading and profit and loss account, trading and profit and loss account of Sanjay Industries Limited for the year ending on 31st March 2016. So we have a particulars here. These are the particulars. This is the amount. This is particulars, and this is amount. Debit and the credit sides. Debit and the credit sides. So we are going to take it here. So we will start with the opening stock. So opening stock is the stock on 1st April. So raw material, and then it is the opening stock. So it is opening stock of raw material which is given to us, stock on 1st April 2015, 6,75,000. 6,75,000. Then we have information on purchases. Yes, purchases are there. Two purchases. 2 purchases, and purchases figure is 22 lakhs and 5,000. Is there any purchase return? Yes, less purchase return. So purchase return here is 90,000. It is 90,000. So we are left with 0005. Then 1. Then it is 21,15,000 is now the purchases part of the material. Then we have carriage on purchases, that is called as true carriage inwards. True carriage inwards, and that amount is 8550, and then purchase returns we have taken 90,000, carriage is also done. Then is the patents, salaries, bills receivables, sundry debtors, bills payable, rent, debtors and creditors, plant and machinery, furniture, fixtures. I think nothing is there. So now we will talk, next is the wages. Two wages, and wages amount is 2,70,000. 2,70,000. So it is taken, so we have taken material, we have taken wages, we have taken purchases, carriage, purchase returns, and there is no other direct expenses like fuel and power or oil and greasing or anything. So we will have not to bother about that. Now we have to take the others, that is buy sales, and sales figure is, that is buy sales, it is 30,60,000. Is there any sales return also? Sales return inwards or sales return, that is the salaries, sales, wages, discount, purchases, salaries, bills, receivables, discount. There is no sales return, so no problem, we will have not to bother about that. This is 30,60,000. 30,60,000, and then finally it is by closing stock. Closing stock is, let's check about the closing stock part, and the closing stock is, stock on 31st March 2017 is 7,92,000. It is worth of 7,92,000. So this is the total amount of the closing stock, and this is 60,000. Sorry, this is 60,000, 30 lakh and 60,000, and then closing stock is of the 7,92,000. So this works out as 000. This is 2, this is 5, 8 and 3. So it is 38,52,000 is the total of this this trading account. Now to GP, to gross profit, and gross profit we are going to, so we have to take the figures like 6,75,000, 21,15,000, 8,550, wages are 2,70,000. So if you take these total items into account, so your GP is 7,83,450. 450 is the GP, that is gross profit. 7,83,000. 7 lakh GP is 7,83,450, and finally it is 38,52,000. So this is the gross profit figure, 7,83,450. So this is the gross profit. Now we will move to the P&L account. So it is by GP, this is 7,83,450 is the GP, and then we will have to take the other items like direct and indirect items. So in this case, stock we have taken, sales we have taken, wages we have taken, capital will not take. Discount is the income, so it is by discount, means it is a discount earned. It is a discount earned. So discount is discount earned is 27,000. Discount earned is 27,000. Then is the purchases we have taken, carriage inwards we have taken, purchase returns we have taken, patents and trademarks, no, its asset, salaries. Yes, now we come to the debit side, two salaries, and this amount is 67,500, 67,500. Then we talk about the bills receivables is assets, sundry expenses. Yes, two sundry expenses, and this amount is going to be 63,450, 63,450. This is the sundry expenses. Bills payable, liability, rent. Rent is a debit balance or credit balance? Rent is the debit balance. To rent, and the rent figure is 36,000. Rent figure is 36,000. Is there anything to be adjusted? Let's check for the outstanding rent amounting to rupees 7,200, while outstanding salaries 8,100 are at the end of the year. So outstanding rent is also there. So it means the total rent figure will be something different. 36,000. We have to take here 36,000. Add outstanding, rent outstanding, add rent outstanding, that is 7,200. 7,200. So it is 43,200 is the rent figure, and same is the case with the salaries. So for the salaries we will have to adjust the 67,500, 67,500, add outstanding salaries, and outstanding salaries are how much? 8,100. So it is 8,100 is the salary. So it is 0 0, then it is 6, then it is 5, 75,600 are the salaries balance. Then we have the sundry expenses 63,450, and then we have the rent part is the 43,200, right. Now let's check the other items here, and when we check the other items, stock, sales, wages, share capital, discount, purchases, carriage inwards, purchase returns, patents, salaries, bills receivable, sundry expenses, bills payable, rent we have taken, debtors and creditors no. Then we have to come back to this. So I think we have taken this part also. Now let's go to the adjustments or the additional information. We have taken the outstanding rent and salaries. Now we will take the provisions for doubtful debts, and that is 4590. To provision for doubtful debts, and that amount is provisions amount is make provisions at the rate of this this amount is 4590. Provisions is 4590. So salaries is done, provision for doubtful debts is done 4590. Stock on 31st March 2016 was valued at this, we have taken. Depreciation, yes. Now the another major expense is the depreciation. To depreciation it is plant and machinery 14% and furniture and fittings 18%. So plant and machinery figure is how much? Plant and machinery figure here is 2,61,000, 2,61,000, and another figure is the depreciation is this, and the another figure is the we are going to charge the depreciation on plant and machinery, furniture and fittings. Furniture and fittings, the figure is, here we have the figure of the furniture and fittings. If you look at, then it is 1,53,000, 1,53,000. So this is 14% and this is 18%. So now if you calculate the depreciation that is on plant and machinery, so it is plant and machinery, and then it is furniture and fixtures. Plant and machinery's depreciation is how much? We have 36,540, and then we have the second is 27,540. So total depreciation works out as how much? 0, 8, then it is 5, 5, 10, 1, it is 4, then it is 6, 64,080 is the depreciation part we have already taken. So it means we have taken the salary 75,600, then the plant and machinery 64,080 means the depreciation. Rent is 2160, it means we have to take the salaries, furniture, also that is amortization. Rent is 43,200, then is the provision for doubtful debts 4590 we have taken provision, this is also done. Then it is a provision for the tax. Only one thing is amortization of patents and trademarks. So we have got the patents and trademarks. Patent and trademarks are basically assets of the companies and they have been amortized. So amortization of the patents and trademarks has to be done. So patents and trademarks figure is here somewhere, that is 43,200, and it says that amortize patents and trademarks at the rate of 5%. So amortization of amortization of patents and trademarks, and this amount is a 43,200 and 5% of that works out as 2160. 2160 is the amortization value. We have discussed the amortization in the previous lectures. So we have got the salaries, depreciation, amortization, rent, provision for doubtful debts, provision for, yes. Now one more item is there, so we have to expand this statement here. This side we will expand this statement and then we will complete it. So this is the credit side, and now if we expand this statement here, so we will be preparing this side also. So if you expand this, then we will have the total items. So then we have to go for the to managerial remuneration. To managerial remuneration means managerial commission or the managerial remuneration. I discussed one adjustment with you, that is a managerial adjustment, managerial remuneration or the managerial commission. So provide for managerial remuneration at the rate of 10% of the net profit after tax. At the rate of the 10% of the net profit after tax. So net profit after tax. So we will have to calculate that profits, and if you calculate, so what we have to do here is we will have to total this and this, all the items we have to total it up, then we have to total the incomes. So if you total the income side, this works out as the total of the income side is going to be, I am going to put it here, income side is going to be here, that is something like 0, 5, then it is 4, then it is 10, 1, 9, 1, and then it is 8. So it is 8,10,450 is going to be the total of our profit and loss account. And now the managerial commission. So managerial commission will be calculated on this total amount minus all of this, whatever that figure comes out, means subtracting the tax on that, and if you calculate the commission on that, then that amount will be provided as a commission. So if you solve this and if you calculate the managerial commission, so we are going to provision for, this is a provision basically we are making, provision for managerial commission, to provision for we are not paying yet, we will make a provision here and then we will pay it at the later date, that is to provision for managerial remuneration. So it means that amount we have calculated is 55,737. 55,737 is the managerial remunerations. Now we will calculate the tax part. To provision for the tax. To provision for, if you calculate now the profit and make the provision for tax, we will be able to find out the tax figure, and the provision for tax is 1,75,000 and then 572. So this is the tax part, this is a tax figure, and now we have to finally calculate the profit after tax, net profit after tax. This is 810,450, and then it is the to net profit NPAT, net profit after tax, and if you calculate the net profit after tax, that works out as 3,26,061. 3,26,061, it means 3,26,061 is the is the net profit after tax after taking this into consideration. So, we have taken the only one indirect income is there, discount, that is 27,000, other is a direct income, that is gross profit, and then we have taken all the expenses like salaries, sundry expenses, rent, provision for doubtful debts, depreciation on plant and machinery and furniture and fittings, then we have taken amortization. Patents, the company has spent on buying these patents, and now this amount is being recovered through the process of amortization. So, 5% we are recovering, we are debiting the profit and loss account this with for this year, and then we are making the provision for managerial commission. So, for the managerial commission what you have to do is, that is on the profit after tax. So, we will have to calculate the profit, calculate the tax on that, then the managerial commission, and then finally we have made the provision for the tax, that is 1,75,572, and now finally the profit after tax is, that is 3,26,061. So, this is the total profit, trading and profit and loss account of the Sanjay Industries Limited. Now, we move forward to the next level, and that is the preparation of the profit and loss appropriation account. Profit and loss appropriation account, and here again the same thing is continuing, same columns, everything is continuing in the same form. And then when we are continuing with this, then is the, first of all we are looking at, is there any opening balance of the profit which is not yet transferred to the balance sheet? If it is there, first we will have to adjust that. So, profit and loss account 31st March 2015, the balance is this. So, it is the balance on by balance on 31st March 2015. This is the balance in the profit account. So, we will have to take in this into account, and this amount was 54,000. This is the, and the profit by profit for the year, by profit for the year, and this amount is how much profit we have calculated. This amount we have calculated is 3,26,061. So, this is the total profits available. We will say it is 160,4610 1,578, and then it is 3,80,000. 3,80,000. So, it is the profit here 3,80,061. So, it is again 3,80,061. We will have to put the things here, but we will make the provision. For first, what are the provisions to be made here? Let's check the provisions to be made. We are going to make the provisions for outstanding. We have done, make provision for doubtful debts done, stock is done, depreciation is done, amortization of provision for done, provision for income tax we have done. Board of Directors proposes a dividend of 10% for the year ended on 31st March 2016 and transferred to general reserve at the rate of 5% of the profit after tax, right. So, we will have to calculate 5% of the, we will have to transfer to the general reserve. To transfer to general reserve, this is the first head of the apportionment of the profit. To transfer to general reserve, this amount will work out as 5% of the profit. So, this is the 5% of this profit is going to be how much? This is going to be 10% is 32,666. So, it means if you calculate this, we have to calculate the 5% of this. So, this is going to be the amount 16,303. 16,303 is going to the transfer to the general reserve, and then to provision for dividend. Provision for dividend is we have to make the provision for dividend. What is the rate of the dividend? That is 10% dividend. So, 10% dividend we have to make provision of what? We take the 10% of the share capital, not of the profit. So, share capital here it is, authorized share capital is 20 lakhs, but the issued share capital is 9 lakhs. So, the 10% of the 9 lakhs is 90,000 rupees. We have to make the provision for dividend is 90,000. So, this total is there, that works out as 1,06,303. 3 and remaining amount will be transferred to transfer to balance sheet, it means to be added in the capital. So, transferring to balance sheet will be the remaining amount, that is 2,73,758. So, this is 380 and 061 is the total of the profit and loss appropriation account, that is 3,80,061 is the total of the profit and loss appropriation account, and from this total profit, that is the balance we had open which was not transferred to the balance sheet or maybe added in the capital, that was 54,000, that was the opening balance kept in the profit, and then the current year's profit is 3,26,061. So, total profit available with us is for distribution is, that is 3,80,061, and then we have transferred to the general reserve 16,303 and provision for dividend we have made 90,000, that is 10% of the share capital, and the remaining amount has been transferred to the balance sheet, and that is the balance sheet means that will be added in the share capital. So, share capital will be appreciating by that amount. So, this is the total process how we calculate, means we prepare the trading and profit and loss account, or the other way around you call it as the income statement of the company form of the organizations or the joint stock companies. Now, we will have to, for this same problem we will have to move forward to prepare the balance sheet, means the balance sheet for the Sanjay Industries, and to check the financial position of this firm, whether liabilities and capital are equal to the assets and vice versa or not, and if it is there then it is fine, there is no problem in the financial position. So, we will have to see and we will have to check while preparing the, means while preparing or by preparing the balance sheet we will check the financial position, and that we will be doing in the next lecture. Thank you very much.